Maverick traders. Welcome out to your market roundup for August 16th, 2022. Corey here with you. Let's get trading. As always, a quick reminder to make sure you follow your trading plan. So today was a pretty quiet day. There wasn't too much going on. As you look at the returns up here, Dow a little bit higher at zero point 0.7, but S&P, NASDAQ, Russell, they're all basically flat. Oil was down a bit harder than anything else, down 2%, was really the outperformer on the downside. Other than that, kind of a quiet day. As you can see, advancers versus decliners is about even. Now, we are in a short-term bullish market. We're above our 50-day moving average. 80% of stocks are 20% below, so it has certainly flipped. And you can see that short-term momentum, but it always brings up that debate of, well, are we in a bull market yet, right? Are we still in a bear market? No, I'm going to try to make sense of that together and show you how I would look at it. On the daily news, Biden signs Inflation Reduction Act into law. This will increase some corporate taxes that could be bad for stocks potentially. It's not a game changer or anything, but it could be incrementally a bit of a negative. And then meme stocks are back. Bed Bath & Beyond is soaring. GameStop and AMC doing okay, but Bed Bath & Beyond has just skyrocketed. And again, on this meme stock trade, they look for certain people as kind of the influencers for the move, and then it kind of goes viral. And Bed Bath & Beyond seems to be the one that is in focus now. So let's look at the S&P, and on the short term, it looks pretty good. Here you can see we're above the 20 period, which is above the 50 period. We've been in an uptrend really since back here when we broke out above the 50-day. That set in motion a confirmed short-term uptrend, and it was also right where you were breaking above resistance and such. So that was kind of the turning point, right? And from there, we've been making higher highs, higher lows, higher highs, higher lows. We're currently making a higher high, 2050. Everything's bullish, right? Everything is bullish and moving to the upper right. NASDAQ, very similar. Broke out above resistance here and closed above the 50-period moving average. Successful retest, kind of the old kiss goodbye of the old breakout point. Higher highs, higher lows, higher highs, etc. Right? So everything looks good in the short term. Now, on a longer term basis, this is a weekly chart. So now each of these candles is one full week's worth of trading. And the 50-week moving average is not something that comes into play all that often. In fact, you were above it for years and years as you're in a bull market, right? And it just really never came into play until earlier this year when we started to bounce there and then break there. And that was a turning point, a bearish turning point where the markets began to trade bearishly, right? We're below the 50-week moving average. To me, that is a bear market. We're still below the 50-week moving average. In my opinion, we're still in a bear market big picture, right? So you have short-term trends are up, longer-term trend is still down, and these are weekly charts, so they're not going to turn quickly. Even if you were to kind of move into an uptrend, it will take a process of multiple weeks. You'd start to make higher highs, higher lows, and get above that moving average and so on and turn into a bull market. But that's the way I'm looking at it, is in context, I expected a rally. I am surprised it's extended this far. I kind of thought that it would fail at about 4,200. Right around there is where I was targeting the upside. We've gone clearly 100 points above that. So we've extended a little bit above that. Is that all clear? You know, everyone wants to define it. Is it a bull market? Is it a bear market? To me, I just turn to the weekly chart and say, where are we in context of the 50-period moving average? In this case, we are below. I still give the benefit of the doubt to the bears longer term. And I still think that we're working in that context. I think this is kind of the downtrend line that we're running into, etc., etc. So I do not expect very much upside from here. That's my take. I think we're very likely running out of gas, and it makes sense for me to really lighten up, which I've done. I've closed off some bullish trades. I haven't really gotten aggressive on the bearish side yet, but I plan to do so and plan to be pretty darn aggressive in those bearish trades. So as we look at the heat map, Walmart and Home Depot, really good news on the earnings front, and those stocks bright green. Otherwise, kind of lackluster. If you look down here in healthcare, a little bit more on the red side. Moderna, certainly in the brighter red, and we're going to focus on those a little bit for bearish trades here in the short term today. Weekly outlook and monthly outlook, they've turned bullish if you're using these metrics of the 20 and the 50, right? The short term has turned bullish, and on a shorter term basis, we haven't moved into a downtrend. Do I expect that this is setting up for a bit of an exhaustion? And even today's candle kind of coming off of the highs, it wasn't a big shooting star. It wasn't a big long upper wick. But see how for the first time in a while, I mean, you had one here that didn't hold. The very next day it offset it. I'm curious. I would expect a little bit of a downward pivot. I would expect that should most of the time signal that you're at least going to turn down for a couple of days, and we'll see if it can evolve from there. On the bullish side, we've got a mixed bag. Nothing really sector related. On the bearish side, we're going to focus a little bit more on some large cap pharmaceuticals as bearish candidates. So let's take a look at a few names here. Qualcomm, we actually highlighted this one last week when it was right here, and I liked it for a buy the dip. As I saw it, we had kind of gone from bearish trend to bullish trend. I expected a bounce, and we've gotten that. The question is, do you just run and take profits? I don't think so. I think this still continues to work its way to the upside. Next pullback gets bought, and you kind of continue to push higher. I expect outperformance, in other words, in that stock versus a lot of others. I also expect outperformance in Occidental Petroleum. This is an energy company. Hasn't done much lately, but I think a little mini cup and handle here. And my expectation is that we go up and through 66. If you look at this one on a long-term chart, pull up a 10-year, 15-year chart, you'll see that this resistance up here in the mid-70s is where it failed in 2018, 2011, 2007, and so on. It's for many decades. It's stalled out at about the mid-70s. I think in the process of time, we are going up to challenge that again. So I continue to look at Oxy as an outperformer. And then Walgreens, I think, again, can be an outperformer. Now, I wouldn't chase it here. Full disclosure, I already have a bullish position in Walgreens, but I'm looking to buy more, add to, etc., etc. So on dips, I would continue to look at that as a candidate. On the bearish side, I mentioned that I wanted to get a little bit more focused on some of these pharmaceuticals which are trading really poorly. Here was Bristol Myers. Let me draw that a little cleaner. If you look at this low here that's set up at 72, you can see there was a huge bounce, and now we're getting the smaller bounces, right? Little inverse cup and handle or descending triangle or whatever you want to call it. The point being, I think we continue to work our way lower. It's a sign of distribution, as they call it. Basically, as the stock tries to bounce, there's more shares being sold and distributed. So Bristol Myers, I think, works its way lower. Newmont we had in the list last week. It hasn't done anything. It's just low basing. But think about how bullish the market has been, and Newmont just cannot catch a bid. It's just flatlining. It's like a heartbeat that's basically non-existent, right? And that's kind of where this is at. It has just been left for dead. I think there's one more quick push to the downside, and you want to take your profits when that happens. Don't expect a ton of downside, just a sharp, quick move, and that's where I'll look to take off gains in the bearish trade in Newmont. And then Johnson & Johnson, kind of similar to Bristol Myers, but maybe even worse. It's already broken below this support level, already had this bearish, weaker bounces, weaker bounces. We broke through and now we're testing underneath. I continue to think that should work its way lower. So large cap pharmaceuticals, healthcare space looks more bearish to me. Our outlook here, well, my outlook is that we're kind of trading range bound. Now, that hasn't happened yet. And I actually had that opinion in the market. So I've been wrong, admittedly. I thought we would be a little bit more stalling, and the market's been stronger than I expected. I mentioned last week that that actually creates less potential for downside. Some people think, well, it's up more, it's probably going to go down more. Actually, because it's surprised people to the upside, it creates less, probably less pressure to the downside, less of an effect that way because frankly, there will be buyers underneath, buyers that sold too early, buyers that are on the wrong side of the trade and such. So I think the market's, range bound is a good guess. Longer term, I do think that after we stall out, we eventually start to trade lower for a while. Approaching that 50-week moving average, the bull versus bear argument to me, that 50-week moving average can kind of dictate. And right now, we're still below the 50-week moving average. That is a very long-term moving average. That averages out almost a year's worth of data, basically, and we're still below that. Retail sales come out tomorrow. And then on the earnings side, Applied Materials, Cisco, Deere, Kohl's, Lowe's, which Home Depot beat, Target, Walmart beat, right? So those are their main competitors. And we'll see how they trade. But if Home Depot and Walmart are any guide, maybe Lowe's and Target can trade to the upside as well. Hope you've enjoyed this market roundup. Have a great rest of your day, and we will see you all next time. Goodbye, everyone.